Okay, so previously we discussed about the inherent limitations and the principles of a sound tax system, the FAT. Now we will discuss the constitutional limitations. You have this due process clause, the equal protection clause, the freedom of religion, etc., etc., etc. What you must remember is that taxation needs no enabling law for the state to exercise the power. As you've learned, the power of taxation is unlimited, okay? And it is plenary, it is supreme, comprehensive. But what you will find in the Constitution or in any other law about taxation is just the limitations of that power, okay? The people deemed it wise to limit the otherwise unlimited potential of the power of taxation. As I've discussed to you before, when you were still lost students, okay, this power was usually abused by the executive branch, or particularly the kings and queens, the noblemen before. Such that they tax their subjects to poverty. But right now, because we are less barbaric, well, the taxation or the power of taxation is being wielded by the legislature. But what I want to discuss is this new case, an interesting one, the case of Commissioner or the CIR versus De La Salle University. This was promulgated last year, November. It's all about Article 14, Section 4 of the Constitution, Paragraph 3. So, what about that case? This is about the rental revenue of De La Salle on its canteen, I think. And the commissioner wanted to tax that because the basis is, you remember when I made you memorize the last paragraph of Section 30. Section 30, as I will read here, okay, that you remember the last paragraph there, right? Notwithstanding the provisions in the preceding paragraphs, income of whatever kind and character of the foregoing organizations from any of their properties, real or personal, or from any of their activities conducted for profit, regardless of the disposition made of such income, shall be subject to tax imposed under this code. Okay? Now, this is the basis of the commissioner that it wanted to tax the rental income of the LSU because of the last paragraph of Section 30 in conjunction with paragraph H. What is that paragraph H? Non-stock, non-profit educational institution. Section 30 is all about exemptions from tax on corporations. Okay? But they are exempted only up to the extent of their income tax. Now, one of those exempted corporations are non-stock, non-profit educational institution. The commissioner argued that, okay, since DLSU conducted the properties or activities, they made it for profit, then as provided in Section 30, okay, of the last paragraph of Section 30 of the NARC, then regardless of the disposition made of such income, the income of this DLSU, then it should be taxed. However, DLSU countered that Section 30 cannot actually prevail over the constitutional provision, particularly Article 14, Section 4, Paragraph 3 of the Constitution. Now, how did the Supreme Court rule on the issue? Okay, so let's see here. This one The ruling of the Supreme Court is that the income, revenues, and assets of non-stock, non-profit educational institutions proved, I repeat, proved to have been used actually, directly, and exclusively for educational purposes are exempt from duties and taxes. Why? The Supreme Court said that this one, the marked distinctions between a non-stock, non-profit educational institution is crucial in determining the nature and extent of tax exemption granted to non-stock, non-profit educational institutions. Okay? As the Supreme Court discussed here, it poses a question in the jurisprudence. Did the 1997 tax code qualify the tax exemption constitutionally granted to non-stock, non-profit educational institution? The Supreme Court said, no, it did not. Why? The Supreme Court said the case or the issue is not really novel, right? This was already settled in the YMCA case. The court in the case made doctrinal pronouncements that are relevant to the LSU case. The issue in YMCA was whether the income derived from rentals of real property owned by YMCA established a welfare, educational, charitable, non-profit corporation was subject to income tax. The court denied YMCA's claim for exemption on the ground that as a charitable institution falling under Article 6, Section 28 of the Constitution, the YMCA is not exempt per se. What is exempted is not the institution, but the real estate. The real estates of YMCA are exempted from taxes that are taxes on real property that are actually directly and exclusively used for the charitable or educational purposes of YMCA. Now, you compare this with Article 14 as later on discussed by the Supreme Court. It disallowed, or the court held that the exemption claim by YMCA is expressly disallowed with the last paragraph of then Section 27, now Section 30, which mandates that the income of exempt organizations from any of their properties, real or personal, are subject to the same tax imposed by the tax code, regardless of how the income is used. In short, the YMCA is exempt only from property tax but not from income tax. Okay. Why? Because YMCA is not a non-stock, non-profit educational institution. As discussed here, the court then significantly laid down the requisites for availing tax exemptions under Article 14, Section 4. Namely, first, the taxpayer must be classified as a non-stock, non-profit educational institution. And the second one is the income must be used actually, directly, and exclusively for educational purposes. Now, the Supreme Court said in this case that the last paragraph of Section 30 is, I repeat, is without force and effect with respect to the non-stock, non-profit educational institutions, provided there is a caution here that the non-stock, non-profit educational institution prove that its assets and revenues are used actually directly and exclusively for educational purposes. And the other one, as discussed by the Supreme Court, tax exemption constitutionally granted to non-stock, non-profit educational institutions is not subject to limitations imposed by law. Okay? We find, as the Supreme Court said, we find that unlike Article 6, Section 28, Paragraph 3 of the Constitution regarding charitable institutions, churches, parsonages, and convents, etc., etc., which exempts from tax only the assets, that is, lands and buildings and improvements that are actually directly and exclusively used for religious, charitable, and educational purposes. However, Article 14, Section 4 of Paragraph 3 categorically states that all revenues and assets used actually directly and exclusively for educational purposes shall be exempt from duties and taxes. Now, the Supreme Court, this may be asked in the bar. I have an inkling about revenue tax and the asset tax, or tax exemption extended to revenues and assets. The phrase all revenues is unqualified by any inference to the source of revenues. Thus, so long as revenues and income are used actually directly and exclusively for educational purposes, the said revenues and income shall be exempt from duties and taxes. This one. We find it helpful to discuss at this point the taxation of revenues versus the taxation of assets. You should master this. Revenues consist of the amounts earned by a person or entity from the conduct of business. It may refer to the sale of goods, rendition of services, or the return of an investment. Revenue is a component of the tax base in income tax, VAT, and the local business tax. Assets, on the other hand, are the tangible and intangible properties owned by a person or entity. It may refer to real estate, cash deposit, etc., etc. Now, thus, when a tax or when a non-stock, non-profit educational institution proves that it uses its revenues actually directly and exclusively for educational purposes, it shall be exempted from income tax, VAT, and local business tax. On the other hand, when it also shows that it uses its asset in the form of real property for educational purposes, it shall be exempted from the real property tax. To be clear, proving, the Supreme Court said, you have to prove, the non-stock, non-profit educational institution must prove that the revenue or the asset, again, I repeat, the revenue or the asset are being used actually directly and exclusively for charitable or educational purposes. Okay? Now, there's an illustration here. If a university leases a portion of its school building to a bookstore or cafeteria, this portion is not actually directly and exclusively used for educational purposes, even if the bookstore or canteen caters only to university students, faculty, and staff. The leased portion of the building may be subject to real property tax, as held in Abra Valley College, YMCA versus Aquino. We ruled in that case that the test of exemption from taxation is the use of the property. So, as discussed here, the crucial point of inquiry then is on the use of the assets or on the use of the revenue. And you have to factually prove it. Avail of the qualified constitutional grant of exemption for the non-stock, non-profit educational institution. As I've said, the tax exemption granted by the Constitution to non-stock, non-profit educational institutions, unlike the exemption that may be availed of by proprietary educational institution, is not subject to limitations imposed by law. Okay? You have to remember that this one, the proprietary educational institution, the law just gave them preferential rate at 10%. Where do you find that? Section 27 of the NIRC. We'll go to that later. We'll discuss that. Paragraph B. Bravo. But this one, the Supreme Court spelled out the difference to highlight the status of the privileged status of non-stock, non-profit educational institution compared with proprietary counterparts. As discussed or as found here, while a non-stock, non-profit educational institution is classified as a tax-exempt entity under Section 30, a proprietary educational institution is covered by Section 27, that's paragraph B. Here it is. Okay? Now, on the other hand, the Supreme Court actually declared that the last paragraph of Section 30 has no force and effect on non-profit educational institution because it is contrary to the Constitution. The law, or as you've learned in your constitutional law, a statute cannot prevail over a constitutional provision. So, but the Supreme Court made a caveat here. It is only applicable, as stated here, that our holding here pertains only to non-stock, non-profit educational institution and does not cover the other exempt organizations under Section 30. So the import here is that under Section 30, paragraph H, or the last paragraph, does not apply to paragraph H, okay, or the non-stock, non-profit educational institutions. All the other corporations, like, what do you have here? Let's see. Oh, the cemetery, company owned and operated exclusively for the benefit of its members, etc., etc., etc. Now, just remember the lessons here. I will not discuss the other ones because this is not really on the constitutional issue or limitations. But this one, class, I really have a hunch that this would be given in the bar. So, if you're asked, okay, you have to define, you have to distinguish. Right now, I'm well, this already exceeded the 10-minute limit, but I will discuss this extensively because, as I've said, this is, well, the YMCA case was decided years ago, and this came out, and it's just right now that Section 30, paragraph H was declared by the Constitution as unconstitutional only, again, I repeat, only insofar as the non-stock, non-profit educational institution is concerned. Okay, the NIRC cannot limit the otherwise unlimited tax exemption of non-stock, non-profit educational institution so long, again, I repeat, so long that it factually proves that the revenues and the assets are being exclusively, actually, and directly used for educational purposes. Those are the keywords. The taxpayer must prove factually that the revenues and the assets are actually directly and exclusively used for educational purposes. So that settles the matter that non-stock, non-profit educational institutions are really exempt from income tax, okay, as discussed. So that's about it for the constitutional limitations. And just remember the CIR versus non-stock, non-profit educational institution. This was decided last November 9, I think, 2016. Here you go. That's GR number 196596. The other GRs pertain to the, I think this is the letter of authority and the documentary stamp tax. But what we've just discussed is about the constitutional limitations. Okay? That's it for the constitutional limitations of